In this video, we'll analyze Square stock and evaluate whether or not Square stock looks like a buy to us. Square Incorporated is an US-American financial service and mobile payment provider headquartered in San Francisco, California. Square sells software and hardware primarily to small businesses and individuals. In 2019, Square generated annual revenues of about $4.7 billion. Currently, Square is valued at around $123 billion. As always, we'll start our analysis by analyzing the business model. When Square was founded in 2009, its business model was providing small businesses the opportunity to accept card payments. At that time, many businesses, particularly smaller ones, didn't have that opportunity, which we consider standard now. As Square grew, the founders noticed they could use their technical expertise and innovation to create further value for the customer with other products. Meanwhile, there are over 30 software, hardware, and service products that seek to help sellers to manage and improve their business. Analogical, there is now a system for individuals which allows them to manage their money. Square divides its business into two segments: the seller ecosystem, which includes all products for businesses, and the cash ecosystem, which includes all products for individuals. As already mentioned, the seller ecosystem helps people to start, manage, improve, and grow their business. Square solutions are easy to use, yet elegant and efficient. Square offers solutions to most business problems and creates value by bringing them all together under one roof, which saves the customer the hassle to pick individual products from different vendors and assemble their own system. With Square, they have convenient and digital all-in-one solutions. Square's core business is of course still the payment business. In 2019, Square processed $106.2 billion in gross payment volume (GPV). This has been generated by 2.3 billion single transactions made by 407 million individual cards. The cash ecosystem for individuals started with the single ability to send and receive money peer-to-peer. Till today, a huge development took place and now users are able to send, receive, store, spend and invest money. By the end of 2019, the Cash app had 24 million monthly active users. Now, we'll at first take a closer look at the seller ecosystem, and afterwards we'll do exactly the same with the cash ecosystem. We'll start off by looking at the customers of the seller's ecosystem. They are a very diverse group containing businesses from various industries like service, food or retail. The food industry makes up the largest share of the gross payment volume with 26%, followed by retail with 17%, services with 15%, beauty with 11%, health and fitness with 9%, crafts with 8%, leisure and entertainment with 4%, casual use, whatever that might be, with also 4%, charity and education with 3%, and finally transport with 2%. The size of the businesses also varies and is categorized into three categories depending on the annual gross payment volume they generate. In 2013, 72% of gross payment volume derived from the category small businesses, which have an annual GPV of less than $125,000. 22% derived from the category medium-sized businesses, which have an annual GPV from $125,000 to $500,000, and only 6% derived from companies that generate more than $500,000 in GPV annually. Nowadays, it's only 45% in the small business category and 27% each in both the medium and the large category. This means that Square's customers are shifting more towards bigger companies. Geographically, Square's customers come from the US, Canada, Japan, Australia and Great Britain. Which products does the seller ecosystem offer? There is a total of over 30 products including various softwares, hardwares and services. All products are monetized through either subscription, service or transaction fees. The softwares include a point-of-sale software, an invoice software, industry-specific softwares for restaurants, retailers and other economic sectors, and a software that allows you to create online shops and social media pages. The hardware offerings include several card readers and all-in-one terminals that process payments and print receipts. Square services mainly include financial services like instant transfers, debit cards and credit that is granted in cooperation with the industrial bank. Now we'll take a closer look at the cash ecosystem for individuals. This business is based on the Cash app. Customers can exercise features of the cash ecosystem in this app. They have an account balance so they can store money, they can send and receive money peer-to-peer, exchange money with bank accounts and pay with their debit card that comes with the account. The use of the app is free of charge, but there are fees for some specific transactions. Furthermore, the app enables you to invest in US stocks, ETFs and Bitcoin. Square's customers are very satisfied with the Cash app, and many of them would recommend this to a friend or colleague. Market researchers surveyed many customers and calculated the Net Promoter Score (NPS) based on the results. The NPS is a figure that suggests how many of the customers would likely recommend the product. Square's Net Promoter Score is 65, which is great and is more than twice the average of banking providers. In addition to this excellent mouse-to-mouse advertising, Square runs direct marketing campaigns like online display ads or email ads, has an affiliate program, and engages in SEO. A marketing factor that is often overseen is the peer-to-peer transaction function of the Cash app. This is not monetized and has the explicit goal to acquire friends of customers as well. A possible dialogue between a friend can look like this. "Hey bro, I still owe you for the pizza the other day, but I don't have cash on me. Can I send you the money via Square?" "What is Square?" "Oh, that's a free app where you can send money to your friends or pay online or even invest. I've been using this for quite some time now and it's actually pretty cool. You should try it." "Awesome, I will." Granted, this may not be one of the most realistic dialogues, but you get the picture. Both the Cash and the seller ecosystem are user-friendly, are updated regularly, and already run risk assessments on 99.5% of transactions. How do the cost structure and the margins of this business model look? The cost of revenues mainly consist of transaction cost, cost of materials for the hardware, and implementation and operation cost of the software. Also, the Bitcoin transaction cost make up a quite substantial amount of the cost of revenue. The gross margin after this cost is 40%. Operating expenses are mainly research and development and sales and marketing. The remainder are general and administrative expenses. The hereafter remaining operating margin is 0.6%. Due to gains on assets sold, the net margin is 8%, but if we use the ordinary result of the company, Square is just break even. Since we've already thoroughly discussed the value creation to the customer and the monetization of this business, we'll now continue with the competition. But before we'll do that, we ask you to subscribe to our channel if you like our videos. Thank you. The markets Square operates in are highly competitive and evolve in a rapid manner. The seller ecosystem faces tough competition of both established companies and disruptive startups. Square tries to differentiate itself by offering cohesive, simple and efficient products, an outstanding service and transparent pricing with flexible short-term contracts. The competitors in this segment include enterprise software providers, banks, payroll software providers and many more. The Cash ecosystem competes with all payment card providers, banking apps, P2P payment providers, online brokers and crypto trading platforms. Square tries to differentiate itself in this segment through a great user experience, easy usability and their branding efforts. In the market for point-of-sale system, Square holds a total market share of 56.54%. The closest pursuer is Revention with 7.54%, followed by Lightspeed with 7.12%, Vegaro with 5.77%, First Data with 4.48%, Clover with 3.38%, Upserve with 1.88% and Givix with 1.23%. After this there are even more vendors, but they are not really noteworthy since each of them just has a market share of at most 1%. The position of Square in this market is extraordinary. This market is the flagship of the seller ecosystem, and since the products are cohesive and it's part of the value creation to the customer to offer all-in-one solutions, the other products benefit from this great market share. But sadly there are no statistics about their market share, so we'll now continue by looking at the market share of the Cash ecosystem. Within the online payment market, the Cash app faces severe competition. The market is led by PayPal with a total market share of 54.61%, followed by Stripe with 18.53%, Amazon Pay with 3.78%, and on the fourth position comes Square with 2.33%. After Square comes Braintree, a PayPal subsidiary with 2.21%, Stripe Checkout, a Stripe subsidiary with 1.98%, Authorize.net with 1.68%, Afterpay with 1.4%, Klarna with 1.17%, and Venko with 1.11%. After all of them come several other vendors with 1% market share at most, so they are not very noteworthy as well. In this market, Square's position is rather weak. The next point of our analysis is the management of Square. Jack Dorsey is CEO since the founding in 2009, and he also is the co-founder and CEO of Twitter Incorporated. He studied computer science and fashion design at several universities but did not graduate, because he was busy programming stuff. Currently, he owns roughly 10% of Square's shares, which make up the majority of his net worth. so he is definitely keen to increase shareholder value. How is the capital of Square utilized? The capital structure is 0.41, which is excellent. The goodwill position is 5.9% of the total assets and 15.5% of total equity. This is not too much. Square's capital turnover ratio is 1.04 and beats the hell out of PayPal's capital turnover ratio at 0.31 and Lightspeed's capital turnover ratio at 0.25. How do the investing and dividend policies of Square look? Square invests 14.2% of revenues in research and development, which is decent, and a dividend is of course not paid because the company just reached break-even. Now we'll look at Square's past growth. In the past 5 years, revenues grew at an annual rate of 40.9%, which is strong. Before we look at the factors of influence concerning Square's future business, we'll examine the current financial situation using the most important ratios. The current ratio is 1.9, the quick ratio is 0.91, and the cash ratio is 0.62. So overall, the liquidity is a little weak. The return on assets is 8.3% and the return on equity is 21.9%, which is a little weak as well, especially if we keep in mind that using the ordinary result, both figures would be near zero. Square's equity ratio is 37.7%, which is way too low because the interest coverage ratio of Square is just 1.2. But as soon as the profitability improves, this ratio will as well. The first coverage ratio is completely satisfying at 1.3. What are the most important factors of influence on Square's business and how could they develop in the near future? Let's begin with the general prospect of the market. The prospect of the market is great because most companies, even the smaller ones, become more and more digital. Square offers several products that help this transformation and therefore should participate in this growth. The mobile payment market is also a growing market. More and more people pay online, pay without cash in the real world, and even use cashless methods for peer-to-peer transactions. Square offers an app that can fulfill most of your payment needs and even enables you to invest. Market researchers expect the online payment market to grow at a compound annual growth rate of 30.1% for the next 7 years. So based on the past growth and the future prospects, we can assume that Square will continue to grow significantly. Sustainability shouldn't be much of a problem for Square since most of its business is digital. An increase in interest rates would severely impact Square due to the low interest coverage ratio. But we can assume that Square is going to increase profitability and by the time the interest rates are increased, it won't make much of a difference anymore. The competitive situation within the seller's ecosystem is great, but the competitive situation within the cash ecosystem is far below acceptable levels. But I think due to the branding efforts and the extraordinary customer satisfaction, Square has quite some potential to increase its market share here. In my opinion, Square's business is not particularly cyclical. The seller's ecosystem might suffer a little during economic downturns, but the cash ecosystem should be quite stable. So overall, the effect of recessions on Square's business shouldn't be too bad. I regard Square's business model as interesting. The growth is nice and so are the prospects for the future. The financial situation is not too good, but we have to keep in mind that Square just reached the break-even point. To evaluate whether or not Square is a buy to us, we now take a look at the current valuation. With a market cap of $123 billion and a revenue of $4.7 billion, we have a revenue multiple of 26. With the earnings of $375 million, we have a PE ratio of 328, but if we use the ordinary earnings of $5 million, we have a PE ratio of 24,600. The price to book ratio is 72 and the PEG ratio is at least 8. This means that Square is sadly way too expensive to buy. Here you can watch some other of our analysis. Have a great day, until next time. Tristan and Charles of Stock Simply Clever.